Computer Age Management, CAMS, is the stock which is on our radar, the company which is on our radar. Their first quarter revenue was improved both sequentially as well as on a year-on-year basis. They saw high SIP registrations and inflows. That's basically the bulk of their business. Anuj Kumar is Managing Director and CEO at CAMS. He's with us to take some questions. Anuj, great to have you with us here. Good morning. Appreciate you joining in. You know, I just want to start with while overall numbers are better, you have seen a sort of fall in mutual fund yields, and that has perhaps pressured the core business a little bit. Could you talk to us about what yields will look like going forward? The last time you were on, we discussed this TER business quite extensively. At that point, you said that if those rules were to go through, that would see your numbers would get impacted by about 5% or so. Since then, there have been developments. There is a new consultation paper which is going to be put out, etc. Could you tell us, what's the road ahead for yields on the core mutual fund side? Go on.
Sure. Good morning, and thanks for having me over. As far as yields are concerned, I think there are two components to what's happened to our business. One, we did reset prices for one or two key customers in the last about 6 quarters, which is the impact you've seen in the past. That process is ending now. So that process closes out this quarter, which means we are not expecting yields to kind of contract from where they are right now. So that's part one that's specific to CAMS. On a broader level, we'd spoken about this last time. You've seen that as part of the last process of TER reset or a contemplated TER reset, SEBI has come out with a new set of consultative guidelines in terms of what they would expect to do. A lot of that is benchmarked to real yields that mutual funds had in the industry in 22-23. So if that is a benchmark, our clients will not undergo a fair bit of contraction, and therefore our position remains the same, that any impact on us would be perhaps 1 or 2%. So small single-digit impact if we see anything at all coming out of this set of TER-led yield contractions. That's where I was.
Last time you were on, you said 5%. Now you're saying 1 to 2%. If this current set goes through.
Because there is a radical difference in architecture in terms of what was being taught earlier and what is being taught now.
Okay. Let's talk about the numbers then, because I want to understand what kind of a growth trend are you looking at. In Q1, your AUMs grew about 13% sequentially. And I think earlier you had guided for the revenue growth in FY24 to be in mid-teens and margins of over 40%. Do you stand by that? And what could the subsequent quarters look like in terms of growth in AUMs?
So what happened was that in the first 4 months of the year, our mutual fund assets have grown about 4 lakh crore. That is perhaps the best that has happened in the last 6 or 7 years. 1Q did not see all the benefit of that because the expansion only started in April. So the 1Q revenue came at 260 crore. Our expectation is that if things go on track, our 4Q revenue could be in the range of 285 to 290 crore in a broad way. The 1Q EBITDA stands at 42%, and we believe that if revenue expansion continues the way we are expecting, and the 4 lakh crore of assets continue to yield in the next 3 quarters, then EBITDA yield could expand a little, let's say, to be in the 43 to 44% range by the time we get to 4Q.
All right. Hi, Mr. Kumar. Good morning. Well, your non-mutual fund revenue has shown strong sequential growth of around 20%. What's the outlook here? I think the target you have is the contribution coming from this segment will be around 20% in the next few years. How do you see this segment growing?
We've seen good growth. Of course, there was a small component of acquisition revenue. The Think 360 revenue started getting consolidated in the first quarter itself. That's about a 5 crore contributor. But overall, we saw over 40% year-on-year, 20% in sequential quarters. Our payments business grew by about 25% year-on-year, alternatives by 19%, KRA by almost 40%. So as we focused on product development and go-to-market, etc., in these 3 or 4 businesses, we expect that non-mutual fund should continue doing better. We are at about 12.5% contribution. We expect that by the end of the year, this should get to about 14.5%. Within this, insurance hasn't kicked in yet. As you know, that the final regulatory dispensation of mandatory DMAT hasn't yet played out. So that hasn't really performed to our expectations. That could be on top of whatever I'm saying.
Sorry, that is the insurance repository. For insurance policies. Okay.
That's
Got it. So 14.5% share from non-mutual fund business by the end of this year, and your earlier guidance is 20% by FY27. That remains intact?
That remains intact. I think we could hit that number a little earlier, perhaps 4 or 5 quarters earlier.
Okay. All right. What about margins in the non-mutual fund side? Could you talk to us about that? They will be substantially lower than the mutual fund side, right?
So scaled businesses are delivering 40% EBITDA, which means our alternatives business delivers that much. Payments delivers about 30%. So as we scale these businesses, they will get to that number. Today, if you see consolidated non-MF, it's about mid-20s EBITDA. Do keep in mind that we continue to fund businesses like Account Aggregator, MF Central, and Insurance right now, which means they're not net positive. So the impact of them turning net positive and the other businesses scaling to closer to 40. In the next about 2.5 years, we think that non-MF should climb up from 25 to about 35%. And of course, company level, we've guided that we will like to maintain EBITDA margins between 40 and 45.
Okay, all right. And just a little more about this non-aggregator business, if you can tell me about, the account aggregator business. Can you tell me about what kind of revenue potential does this account aggregator business have? Not now, maybe over the next 1 to 2 years?
So you've seen that there is a rapid adoption across the board, especially from lending and now from personal finance management and capital markets. Multiple use cases have emerged. So it is fair to assume that at a steady state, this could be a market between 500 to 1,000 crore, let's say in the next 6 to 7 years. But it's a crowded market. There are 12 licensed account aggregators and many, many TSPs. So while it looks like a promising market, revenues will be fragmented. Single large dominant share players will be tough to find.
Okay.
Just one clarification. You said to get 20% of revenue, to get 20% of revenues from non-mutual fund side, but with the early guidance for FY27, you said you may get to it 5 to 6 quarters before. Or there was that month?
Quarters before.
Okay. So by FY26, you should be at 20% then.
Yeah, we are kind of pushing the pedal to get there.
All right, got it. Thanks very much, Anuj. Appreciate you joining in, and it's always a pleasure having you with us on the program. That's CAMS stocks, about 1% higher right now. Well.